A lot of people will argue that day trading indicators are a scam. That they'll tell you that, oh, you can put all the lines and indicators on the chart that you want, RSI, EMAs, all these things on the chart, all you want, but it's all a scam. It doesn't really matter. You're still going to lose money. That's the general consensus a lot of times. Well, you have people that think that you can put millions of indicators on a chart and you're going to make millions of dollars, or you have the other majority of people that believe that indicators are a scam, that you're just wasting your time by having indicators on your charts. Why indicators are useful and how you can use them, but also let's talk about why indicators at the end of the day are still just a lagging thing, right? Indicators are always lagging. They're following the market. They're not going to tell us which way the market's going to go. They're going to give us an idea of what is happening, but only kind of in the past. Just because, the RSI is peaking or the RSI is at a low does not mean the market's going to move based on that RSI alone. Let's talk about it. Let's talk about it, my friends.
Yeah.
What's going on, guys? Patrick here. Today, we're talking indicators. I know I've made videos about like 1,000 different indicators. I've talked about all the different ideas, candlesticks, time frames, all these different things, right? But one thing that I've learned over the years is indicators can be a tool to use to find setups, to find overall trends, to, kind of create different reasons to enter a trade or maybe exit a trade based on your indicator. If you have, 20 different indicators on your chart, maybe that's a little much. Maybe it's a little drastic. But if you have a specific strategy based on, moving averages, if you have a specific strategy based on the idea of the RSI being overbought, oversold, if you build a strategy around that indicator and you back test it and you see like, hey, look, normally when the market sells off, when this happens and these things happen, we get this reaction. Like that's, I think, very doable. Like if you're realistic with it, if you think like, hey, this indicator is not going to be the end all be all. Like this is not going to make me a millionaire, but this indicator will help me make more informed decisions, right? That's the best way that I think about it. That's the way that I like to kind of focus and think about indicators. Again, indicators are lagging. Like they're lagging in the price action. The indicators are not going to tell us like, hey, this is exactly what's going to happen. It's not that simple. I've seen it so many times where I see like, oh, look, we're bouncing off the moving average. I'm going to get long. And then all of a sudden, boom, it just cracks right through there. So that indicator, that support is only good until it's not. For an example here, this is the 3-minute chart. I've talked about this like setup, this strategy a bunch here on the channel. Right now I've got different indicators. I've got the EMAs on there, 3 different EMAs basically. And then down below I have the MACD. At the end of the day, like I said, these indicators are not going to guarantee that I'm right or I'm wrong in my trades. But what these indicators do is basically give me an idea of like, okay, look, normally like if we're below the EMAs, the MACD's down here, it's crossing, the market goes lower. Most of the time when the market breaks through these levels, it's not holding these supports, it goes lower. So I know like, okay, let me identify what is happening here. The trend, we're going down. Perfect. I can see that. Let's get rid of all the indicators in general. All right. So now I see, okay, price action, we're going down. That's pretty clear to see. Okay, it makes sense. The price is going down. Hey, if you guys enjoy these videos, do me one big favor. Please hit that like button. Also, if you want to learn more, hit the subscribe button. And also leave a comment down below which is your favorite indicator. I'm interested to find out what you guys are really loving when it comes to your favorite indicator. If you could only have one indicator on the chart, which indicator would it be? The VWAP, the EMAs, RSI, MACD? Which one is it? Let me know in the comments below. But if I start to add indicators on here, I can start to see like, okay, look, wow. We were above those indicators. We were above the EMAs for a little bit. And now those EMAs are crossing. Now we're below it. We're getting stuck there multiple times. We're seeing that trend is pretty much intact there. A little bit of a pushback up here. But in general, we're going below. What's my MACD telling me? My MACD is telling me that we crossed all the way back here. The MACD cross. So it's giving me confidence, right? Like if I'm going to get short here, I'd like to see like, okay, I want to see multiple indicators lining up. I want to see like, hey, look, we crossed. Perfect. Oh, what's the MACD do? The MACD crossed. Even though, I could probably figure out like, hey, I want to get short here. I could figure that out with just like an overall trend. Perfect. Okay. I see this trend's kind of breaking there. We got 1, thing agreeing with my idea. I want to be bearish. I want this market to go lower. I want to short. I think the market's going to go lower. That's one great indicator. We had a trouble, again, I look here. Okay, we had some resistance. Boom, perfect. Now I have two reasons to believe this market could go lower. We've got stuck multiple times, kind of a double top there. We've now hit this trend here. We've broken to the downside. But if I start to add, okay, now I'm like, hey, look, we're below the 21 EMA. Earlier, we were above the 21 EMA. So that's telling me that the trend is changing. Again, giving me more confidence in this move going lower. Okay, let me add the 8. Oh, wow, now the 8's crossing. And now I look, oh, the 13's crossed. So all these indicators have now told me that, like, hey, this move down, it's showing that this is happening. I've already kind of identified kind of what the trend was, but now I've got, 1, 2, 3, 4, 5, 6, 7, 8 different things lining up that are now in the same movement that I believe is going to happen in the market. Like, I believe the market's going lower, but, with no indicators, I'm just thinking, okay, just off price action alone, okay, it makes sense. Like, it's going to go lower. But when I start to see, like, everything kind of lining up, I'm like, oh, okay, now I feel more confident. I see this setup. I'm having all of these indicators just like ding, ding, ding. I'm doing a checklist. I'm going through it. I'm like, okay, we had a double top. Perfect. I'm going to draw that line there. Resistance. Perfect. We have this little bit of like a trend, kind of a higher low there. We're kind of bouncing here, but boom, we just broke through that. So now I'm like, okay, well, we're definitely going down. I think we're definitely going down. And again, I look to see like we're below the EMAs. Okay, wow. Okay, that's really looking good now. Like, I feel really good about this. I feel really confident. We're going to go lower. We got the MACD cross. I got all these things lining up. I can look at different time frames as well. Let's look at the 15-minute time frame. On the 15-minute time frame, we broke below the EMAs there. We can see the EMAs now are up here on the top of this move. The market has moved down. If I look at the bigger picture, like where's my target at here? I'm thinking supports like down here at the 40s. That we could get a move down here to the 40s. Like, that seems pretty doable, right? Like, that looks pretty doable. Just based off of kind of, me drawing lines, seeing the support, the resistance. But in general, again, these indicators are not the end-all be-all. These are not telling me exactly which way the market's going to move. It's not telling me exactly what's going to happen, but it's just giving me more confidence. At the end of the day, the best tool, the best way to go about trading is price action. Understanding price action, understanding like, hey, look, double top. That's price action, right? The market's going to move lower here. We have no support below this. Understanding the overall structure of the market's always going to be your best bet. Like, understanding how the market moves is always going to be your best bet. But having these different indicators are just giving you more confidence to either stay short, to stay long, to buy the dip, to get short. These indicators are giving you more confidence in your overall thesis. Your overall thesis really is what matters. Having that thesis that the market's going to go lower, the market's going to go higher, understanding like, okay, look, like I think the market's going to go down here. Okay, perfect. Understanding that is one thing. But again, having those indicators, having a strategy built around these indicators will give you a higher percentage, because at the end of the day, when we're trading, we're trading percentages in terms of risk to reward. Like if I look at this setup, I'm like, okay, normally this type of setup here, there's like a 50, 60, 70% chance that this goes lower. So my risk reward is much better than me just going, oh, well, yeah, I'm just going to go crazy and I'm going to buy because I think the market's going to go up. But having no actual thesis is going to make it so that my odds are basically 50-50. There's a 50-50 chance the market's going to go higher, it's going to go lower. But if I'm able to identify the overall price action and then be able to add on the moving averages, I can see the moving averages, I can see the RSI, I can see the MACD, I can see support resistance, things like that. That's just giving you more confidence to be like, hey, look, like everything is lining up. Everything looks really, really good for a short here. Everything looks really good for this move down. Having those indicators gives me more confidence in the move, right? It's giving me more confidence to stay in that move longer, to really maximize my profits. And that's the thing, like if you're just jumping in and out quickly every single time, like you're not going to be able to maximize your profits. Like you really need to be able to understand how the market's going to move. You need to be able to understand like, hey, if this happens, if this line breaks here, if this area breaks, if this support, blah, 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 whatever, if these things are happening, same thing with like Bookmap. I see people commenting, this is the same, another tool that I've been using a lot is Bookmap. I see people comment like, oh, like this is, what does this do? It's Fugazi, it's Fugazi. This is not going to help you. But at the end of the day, what this is letting me see is overall the liquidity in the market, the idea that, okay, we got a bunch of liquidity down here, we got liquidity up here, we're like right in the middle right now. It's giving me the idea, like, I think before we go back up, we're going to test this low again. I think we're going to move down here again and kind of test down here and take out this 49, 47 area first. It's giving me an idea, like, where my target should be. It's giving me an idea, like, okay, I see that overall, we've been sell. We've got resistance up there. I'm seeing bigger picture kind of what's going on. And again, it's giving me that confidence to be like, hey, look, like, I think this is going to follow the trend. I think it's going to go lower. Like, I believe that if this continues to move the way it's moving, that we're going to go lower. So having those indicators, having these tools, again, it's not going to make me the best trader in the world. It's not going to make it so that I am always right, but I'm trying to skew the odds, right? Like I said, the market can go up, it can go down, 50-50 chance. But as a trader, obviously, I want to skew those odds. 50-50 is not good enough. It's not good enough to trade. At that point, you might as well go play roulette. I need to skew those odds, 60, 70%. At least to the fact that, like, hey, if I'm going to enter this trade, I need my risk reward to pay out. I need there to be a risk reward there. I need to understand what risk reward is in the sense, if I'm going to risk $500, I want to make $1,500. I want to make $1,000. I want 2 to 1 at least, minimum. So having these ideas, having these indicators, again, I'm trying to stress the fact that it's not going to make it so that you're the best trader ever. But if you figure out a strategy based around these indicators, you back test it, you see what's happened before, you're using these indicators every day, it's just going to make your confidence that much stronger. You're going to be able to hold your trades longer. And when those big moves happen, you're going to be like, hey, I've seen this before. I know what's going to happen here. Like, I know when all of my setup is setting up, when I have this perfect setup for this breakout, this breakdown, when all those things are lining up, I know what's going to happen. This market's going to go down. Right? I have confidence in this because of my indicators, my setup, my overall thesis. But, just going on the internet and finding out, like, oh, this is the best indicator, and putting it on your chart, not understanding, not having the experience, not seeing how the market moves around the indicator, I think at that point, you're just gambling, right? Like, you really got to put in the time. You got to put in the effort. You got to stick to that strategy. You got to kind of see, like, hey, look, like, I like this strategy. This is working for me. And you got to do it, like, consistently. The thing is like, one day it might work. The market conditions might be perfect for that strategy. And then the next day, it just might not work at all. Like, that strategy might not work. But you have to identify, like, hey, look, it's not the strategy, it's the market, right? In a trending market, this strategy works perfectly. The breakouts work great. In a choppy market, the breakouts don't work. Okay, perfect. That's not to say that your strategy is wrong. It's just to say that your strategy, needs certain things. Like, it needs momentum. It needs a trending market. If you're a trend trader, well, then you're probably not going to be able to use your strategy, your trend trading strategy, in a choppy market. If the market's just going sideways and you need breakouts, you need breakdowns, that's your strategy, well, then you shouldn't expect that to work in a choppy market. Just because your indicators are on the chart doesn't mean it's going to work. You need, certain parameters, certain criteria for your strategy to play out. And that's the big thing to focus on here. If it works for you, it works for you. Like, at the end of the day, like, all these indicators are lagging by the end of the, all that matter, at the end of the day, all these indicators are lagging. Your indicator, my indicator, who knows which one's best? Who can argue, like, hey, this one works the best, this one doesn't? It really comes down to what your overall strategy is. But to say that indicators are a total scam, they don't work, I have to disagree with that. I have to say that, it really comes down to understanding, what these indicators are in the first place. They're not telling us exactly which way the market's going to move. They're just letting us see, like, overall trends. They're letting us see, like, hey, look, this is like confidence. Like, I think this is going to go lower. Hey, we just bounced off the 20 EMA. Normally when we bounce off the 20 EMA, we normally get a bounce higher. Normally when we break down to the VWAP or we get stuck at the VWAP, we go lower. So having these things on the chart, you start to build up that kind of muscle memory of being like, hey, like that VWAP's a very powerful thing. If we get denied at the VWAP 3 times in a row, like, I'm thinking this is going lower. So you're kind of just constantly seeing these patterns, you're seeing these things play out, and you're starting to build these strategies around the idea that, like, hey, I've seen this before. I know that, like, hey, if the RSI is at an extreme high, there's a very good chance the market pulls back. Is it guaranteed the market's going to pull back? No. It's not guaranteed. Nothing's guaranteed in this market. But, like, do I want to get long when the RSI is super high? Do I want to get short when the RSI is, super low, when the market just sold off massively? Do I want to get short? Probably not. Understanding these things will make you more consistent, will make you more profitable in the long run, right? Being able to understand, like, hey, this indicator right here, not that this indicator is the end-all be-all, but I do know that, normally when we interact with this indicator, we normally get a move, up, down based on what the overall trend is. So that's one thing to think about. Really kind of thinking more so bigger picture. When I'm looking at my charts, I'm looking at these indicators, not so much like, hey, I want to know exactly what to do, but I want that kind of confidence that, like, once I decide that, okay, I think the market's going lower today. Okay, I see that we broke through the VWAP. Oh, wow, this is looking good. We broke through the EMAs. We're breaking through support. All those things are happening. Now I have confidence to really kind of hold on to that trade to maximize my profits. So there it is. What's your favorite indicator? Let me know down in the comments below. I'm interested to find out if you guys have a favorite indicator. Which one is it? Let me know in the comments below. I'll talk to you guys later on.
Yeah.